People who enjoy riding in Uber cars will be able to buy shares in the company for the first time this morning. The stock market debut is expected to be one of the largest initial public offerings ever, with the company valued at more than $82 billion. That is about twice the size of the Ford Motor Company. Uber's stock will start trading at $45 a share. CBS News business analyst Jill Schlesinger is here with what this means for Uber drivers and their customers. Hello, Jill.
Hello.
So Uber hasn't turned a profit. How is it? Why is it such a big deal?
Well, you know, it's losing billions of dollars a year. It's amazing. And so you say to yourself, well, why would anyone buy a company that's losing money? And it's really the premise of becoming what they're calling the Amazon of transportation. We do ride sharing and ride hailing right now, but we'll add scooter rental, bike rental, we'll add freight delivery, we'll add autonomous driving. And so all of these things together might give Uber the chance to become the platform for anything transportation related. The one area of their business that makes money, food delivery. And they're going to hope to build on that as well.
Well, shareholders will ultimately want a company that makes profit, just as John was talking about. So will we see a rise in prices?
Well, I'll tell you something that's amazing. Experts tell me it's probably 10 years before this company actually makes money. So I think customers could see the price start to creep up. Right, you know, this is how it works. We buy a subscription service. We get hooked on it. We love that drug, and then they raise the prices, and we start saying, okay.
Yes.
And that could happen. I think fares will likely rise for both Uber and for Lyft.
It's the gateway drug to all kinds of other behavior. Drivers, they have struck against Uber. What does this mean for drivers?
Well, Uber in this offering is putting aside some money for cash bonuses for drivers, and it's based on how many rides that you've completed. But I have to be honest with you. I mean, many of these Uber drivers are not in the position to use that cash to go ahead and buy stock. So I think it's kind of silly. Drivers are going to keep the pressure on. Remember, these Uber drivers, they're contractors. They are not employees. And as such, Uber doesn't have to pay a whole host of benefits. If that were to ever change in the future, the financials of this company would be very different.
They should give them some shares.
Yeah.
Just give them, right? Don't give me a cash bonus. Give me
That's
the shares.
right. Give me shares. Invest in the company's long-term future.
I think the drivers would be very happy with health insurance and a 401k.
So who benefits most here?
The founders, obviously. The early investors are clearly the winners here. Some of the big investment banks that do the underwriting. And, you know, honest to God, when you look at all these numbers, it is not it's hard not to really see that a lot of these drivers are trying to claw their way to make a living, and there will be instant millionaires and billionaires early in, you know, again, a lot of the employees as well. So it's hard not to have that feeling as you walk away from a deal like this.
Yeah, but the drivers are still saying, what about us?
Yes, absolutely.
What about us? All right.
Jill, thank you.
Sure.